Welcome to TradeTheNBI.com. This is John's reports for May 11th. And while yesterday, Thursday was pretty benign, pretty much started up and never ceased till right about the end of the day. We've just had this continual rising red DOC, which is long-term buyers continuing to suck up. That's not surprising coming off of the 4th, which where we expected fund money to come in, and boom, that caused our first rise in it, and then we maintained ourselves above the 38. The 50% became the next one, and once we got above that, that was the big push, because it's very attractive for institutional buyers from a big standpoint. Once you're above those key levels, then you continue to add, and then of course short covering will take place right above that previous peak, which was right about where we're at, and there's a little softening right in between there, but you can see now what we're doing. We're hitting up against these lines right here, which are the ABMs, and that goes back from the ABM reset that was way back at the beginning of March. And what that does is a little bit of resistance there, and then this becomes the key threshold. If we look at the do fast right there, the yellow one, 2750, that becomes the top line, and above that, then it's off to the races for much higher, and we can shrink the chart there, because then you're going to be talking about pushing back towards the larger highs. You'll have next level up here right around 2800, and then boom, all the way to the overall market highs. So something to pay attention to. It's pretty much in line, but it's interesting because with the ABM, it sort of represents, one of those things where you could have just been out of the market or short the market below it until we ended up with our other buy signals that came through. But this is where utilizing these Morganacci lines really provides assistance in, what your thresholds from a longer perspective are to be in and out of the market. And you can see now too, critical that we're moving positive shakeout. So it takes positive shakeout to create long trend runs going forward. So it becomes a key element. Now, the other day we ended up getting yellow extreme, which means the algo activity has been almost at an extreme level. It's dangerous to call it overbought or whatever, but it just indicates that you've had an extreme move from an algorithm standpoint, meaning they've been buying this significantly despite any other factors. So it's always worth noting. We can see the NQ even further along past this level. So now they're almost approaching the 76% line going forward there. So another powerful. Turning to the euro here, we have, a continuation of the decline. And we've got a little bounce back that helped the S&P just a little bit the other day because it's stabilization. However, with this much damage, with this many moves below the negative 60 here, it's likely that any pop, given this deep a move, is not going to survive, and you're going to come back to retrace at least a pretty hefty portion back down to the lows. So wouldn't be all that excited about that bounce. Surprisingly, TLT rising here, bonds moving back up from a dip below the green line. Again, likewise situation. Strange counter move. Oil continuing to be pressed up to the peaks of it. Even though we have declining shakeout on it, you've got cyan below the red line there, and that's still bullish for oil in general. And gold making it spike. This is something we've expected quite some time. It's been in quite a decay, given the fact that the potentials for inflationary pressures, have existed in a broader sense. The fact that you've had the labor participation and unemployment so low has sort of had a dampening effect, if you will, on the inflation prospects, and it's been sort of problematic for gold because you need a super tight labor market with that rising oil in order to really spur the jump there, because that's going to have bigger inflationary issues. And secondarily, then you would look also at the cryptocurrencies, and they began to rise on that too, because again, this could be also the counterplay from an inflationary standpoint, moving into crypto's devaluation of normalized currencies. But then we just had that news about cryptocurrencies. I believe there was an article on Zero Hedge talking about the latest situation and the reduced amount of mining for Bitcoin, and that has caused utter collapse. And this isn't anything new. We had the dip below the red lines back here on the lows. We had a nice little pop from it, and beautiful. The DOC spread started actually a little bit early here, but my confirmation for a DOC spread would have been right here anytime you had the steel above red, which isn't something we've talked about before. It's something I'm putting into the newest paint bar. Extraordinarily effective when looking for DOC spreads, which is just the cyan moving above red. At the same time, you have green dipping below red. It's sort of that indication of the final power has faded from any setup in general. Now this is the intraday 5K. Look at that. I mean, starting back from the beginning of the day, there's just not a whole lot to do when you see this kind of setup. It's just straight up. Oh, if you're looking at all these little dots, it's a show me study that I was working with. What it represents is anytime you see the red above, that is a positive extreme. The yellow represents just before the red positive extreme. The green dots underneath represent dips below to the negative 45, which tend to be bullish, very powerful. And interestingly, the dips right back here at the very left of the chart is a red, but it's a red above 50%. Those tend to be bullish as well, because oftentimes you'll get a reset, and oh, lo and behold, here you get the two nice little green ones, which is bullish. And then the dark green here, which is the dip below the red line above that 50, tends to be more bullish, and sure enough, caused the pop. Likewise here. Anytime you get that kind of dip, it's sort of a, I don't want to say oversold, but what it's representing is that you have an algorithm behavior that's suggesting that you've ended your decline setup within that. Now below 50%, you get just the opposite effect. So it's sort of like how the DOC works when the steel dips below like negative 13. It's the equivalent of it coming from the top side. So right now we're just back and forth in a little bit of pre-market muck, so to speak, but fully reset from a oversold condition. So wouldn't be surprised that we continue to push back towards highs at this particular point. So it's a little early at this stage, but it's all right. The overall market is generally kind of bullish, but as we get a little bit thick into it, the nice thing about this kind of a pullback here is you eliminate all the way back to this little dot right here, and this makes it kind of easy to sort of identify what those little zones are. Adding into it a few other specific elements, even related to the Fibonacci. And as you get these ranges narrow between the high and the low in the Fibonacci, it's sort of like acts in a similar way to the Bollinger Bands. They squeeze so they can enlarge. And knowing that too, you get a very different risk profile in trading when you get this kind of narrowing range. It sort of creates a compression effect, because the market really does its best when it's expanding or moving away from the constricted phase, and that's where you tend to get building into a position and then it explodes from there. So it's worth noting, and I've done a lot of little work with that and the Fibonacci's on that, so that's going to be an added element going forward. So that's the general long and short of the situation at this particular point. It was interesting to see this little gold setup here, which was the rising gold, meaning that the trend has reached a pretty extensive level. We had a couple of series of that gold rising all the way through here, and then the little dark line right there represents the beginning of the azure as we sort of reached the peak of the move, heading into the DOC setup right here where we started that little decay. It actually started a little bit earlier right there when the green faded below, but you really need that confirmation cross, even if it's at least the cyan over green. Usually is the beginning of it. But when it happens in these bullish runs, again, best your expectation is 50%, but when you start to see this from the extreme, sort of lets you know that that's sort of wound down for the time being. A similar thing happened over here. In this particular case, it was just below the 50% that it started before, and then boom, closed with it after that. So that's where we're kind of trading in this hyper narrow range, the span between the 100% and the zero. If I get that all the way into the chart and still maintain it there, you can see it's barely like 12 points. So that's just too tight. So that's going to have to expand. And Friday, perfect time for that to do it. So all in all, there you have the long and the short of it for now. As always, trade well. We'll talk again later.